Again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, January 3rd, 2020. Happy New Year, everybody. So, even though the stocks pushed to new records, there is some really concerning Middle East escalations, and this could mean a gap down on Monday for stocks. Not projecting, obviously, not predicting, but it's a very concerning situation right now in the Middle East. We'll also look at the junk bonds. The narrowing of the trading range is a cause of concern. The reason being is because junk bonds and stocks move together in lockstep. So if one goes, the other one should also go. Flight to safety may have already begun, and treasuries are moving higher. TLT. Oil obviously is reacting to the events in the Middle East, and well, my position is I'm bullish on oil, so I have actually a position in USO. So for me, it's beneficial, but overall, it's a very sad state of events, I think. So dollar is being pressured. We'll look at Canadian dollar trade, 290 pips gain, Swiss franc, 224 pips gain, and euro could be next breaking out. Gold is benefiting from all this turmoil, and we're not going to look at Bitcoin, but gold is breaking to new highs. Okay, so overall, stocks are at records. Obviously a bullish chart. The today's events with the killing of the Iranian general is honestly, I it's very concerning. So we could see a gap down on Monday. For example, a good level, decent support level here is at the green line at 313. This is S&P 500. Now, what's this green line? Blue line, red line, and yellow line. So these are uh, overlays on the chart. You can see that I can turn them off right there. So if I turn them off, there isn't as much context in the chart. It's really kind of difficult to read the chart. If I turn them back on, you can see it's very nice and clear. You can see clearly where to buy, where to sell. The latest good opportunity for S&P 500 was almost a year ago in February of 2019. The reason being is because I look for a pullback towards the blue line. So these indicators are based on price action, and I use them in my own trading, and my clients also use them for MasterChartsTrading.com. So I am just super concerned about the way Middle East is panning out right now. With just pure looking at technical price action right this instant, I don't see too much damage yet. But let's see what happens next week, I guess. Okay, IWM, the small caps are feeling a little bit more pressure. Also notice the way the indicators are curving up. And then additionally, you can see that here where I'm hovering, somewhere in November of last year, 2019, the trading range, and I'm going to draw a line here between the green and the yellow lines, was 23 points or 14% or so. So right now the trading range has already narrowed for small caps. So you can see that it is already 11%. So the trading range narrowing means that bearish levels, which are currently at 144, are getting closer to the price action, and the price will have less distance to travel towards bearish levels. Will it happen? And nobody really knows, but the more narrow the trading range, the more likely it is that the trend will change. Right this instant, the trend is still up. What will happen in the future, nobody really knows. But the way I'm reading this chart is that the trading range is narrow, and so we should be at the very least advancing our stops. Same goes for Dow Jones. You can see the narrowing of the trading range as well, although it is at new records. So I think I would give more heavier evidence to the new records part. And the same goes for QQQ, also at new records. So overall, uh, it's a very nice chart, very nice looking chart. So will the Middle East events affect this chart? There is a good chance of that, yes. So I would be more cautious, I guess, now. And this is very pronounced on the junk bonds chart. So you can see here, this is JNK, junk bonds, so um, high yield bonds. So even in mid-December, you can see that the trading range was about 7 points, or about 6.7%. Now the same trading range right now from yellow to the green line is only 3.8%. So it literally halved. Notice the way the indicators curved up sharply. And what this means, even though we're at 52-week highs, it means that the price has less distance to travel towards bearish levels. And as I keep saying, junk bonds and stocks, they move together in lockstep. So if one goes up, the other one goes up as well. There's a very high correlation between the two, the junk bonds and stocks. So again, I am giving more evidence to the fact that we're at 52-week highs, but the narrowing of the trading range is definitely of concern to me. Coupled with the fact that treasuries TLT are again moving higher in a very kind of convincing manner. In fact, this is an actual alert. I don't normally do this, but occasionally I will show the actual alert in real time. So this is pretty much real time. Today I sent an alert out, and we'll see if it gets anywhere. So TLT, the treasuries represent a very safe kind of security, and the fact that it's moving higher in conjunction with pretty obviously scary events in the Middle East is a testament to the fact that investors are rotating. So what are they rotating? They're rotating into bonds. Uh, if this continues, we will see a move higher for bonds, and by extension, we can do TYX, the 30-year Treasury note yield. You can see that the yield is dropping, and it dropped. I think I already showed this chart in the past. I said that if I was able to trade this particular security, TYX, I would be shorting it here. Uh, I can't really trade it, but the inverse, I can trade the inverse. I can trade TLT. So the TLT I would be buying now. So together, overall, this posture is of concern. Uh, I mean, if I lived in a vacuum, and I knew nothing about the world events, this chart of junk bonds would be my most concerning one. All right, and here's oil, the commodity that Middle East is famous for. Um, it's moving higher. I have actually a position in USO. Here's my position, United States Oil Fund. I bought here on the November 7th at $12.05, right there where I'm hovering. My position is up 10% today, so I'm not complaining. I'm just very concerned about the way things are right now in the world. And the way things are right now in the world, the traders and the investors are betting that the prices are going higher. The reason here is relatively obvious, but quite often there is very little reason that we can find. So this is the reason why I just generally don't watch the news too much, and I simply concentrate on the chart. So I was looking for a breakout. I got the breakout here. Was another alert here on 21st of November. So oil is definitely in a bull market. And this up move, even though it's caused by the events, is not unexpected. We are expecting a higher highs and higher lows for a bullish security. This is now currently a bullish security. Oil is currently bullish. Where is it going to go? How high is it going to go? Again, nobody really knows. We can do an estimate of, I don't know, maybe a measured move or something like this. So uh, it's a very kind of shallow chart, so it's kind of difficult to even do this, measured move. But it seems like oil really wants to go higher for whatever reason. So, yeah, again, very concerning events in the Middle East. All right, let's switch gears a little bit. Here's the dollar index. Dollar index has reversed, so perhaps this is also contributing to the strength in the oil. So dollar has reversed, in my opinion, here on the 12th of December to the downside. And again, here's another opportunity to short it if you can trade this security DXY. I think some countries are able to trade the security. We really can't in the United States. But it seems like dollar has reversed to the downside. So when we get to gold, I'll show you that this is indeed helping gold. But for now, I wanted to boast a little bit about the performance and the very cool trades that we did recently. So here's USDCAD. USDCAD latest alert was just superior. 290 pips move. Alert was sent right there at about 1.324, and it just collapsed in our favor. So in other words, United States, Canadian dollar is gaining. USD CAD is losing value, but it's going in favor of Canadian dollar, USD CAD. So I would be shorting. So we shorted this currency pair. Very nice move, 290 pips move again. Congratulations to subscribers at MasterChartsTrading.com. USDCHF, same thing, big move in our favor. 224 pips, again, congratulations if you opened recently. Very nice move. I mean, just really difficult to complain about this at all. So again, congratulations to subscribers. And this is moving in favor of Swiss franc. Pretty much vast majority of conventional currencies are moving uh, in favor of the currency against the dollar. So dollar is losing value versus many currencies currently. Perhaps euro is next. So you can see the downward facing arrows. These were not the alerts, but they were. If I was trading this particular security, euro versus US dollar, I would have been shorting it here. Again, I did not send those alerts because I was thinking that dollar is about to turn around, and I was proven correct so far. Perhaps we're witnessing a breakout in the euro versus US dollar. Perhaps we'll see a close above the blue line, currently at 1.127 or so. If that happens, that pretty much is it, and the dollar is most likely going to collapse, because a breakout here would mean a significant move higher, I think. So all of this turmoil as well as weakness in the dollar is helping gold. Why is this helping gold? Because the gold is traded as a currency pair, XAU over US dollar. So if USD on the bottom is getting weaker, that means gold is getting stronger. A perfectly normal relationship. And you can see we actually did trade this, and some people probably still have it open because technically there was no stop hit. Stop would have been another close below the blue line, and there was no close below the blue line. So theoretically, if you opened back here in May or even in March of last year, then you have a very sweet gain of over 20%, and it seems to set to continue higher. Now, of course, some people, some people can hold for this long. Many people cannot. As I keep saying, quite often holding for longer is better. Here's GDX. We did trade this one, this up arrow. There's one more here on 24th of October, and then another one right there, 23rd of December. Looking pretty good. Again, these are actual alerts. So GDX, the gold miners ETF, seems to want to go higher, which again makes perfect sense because gold wants to go higher. Some of the trades, are up significantly. Like, let me show you Pan American Silver. This thing is up 46%. My position in Hecla mining is up almost 47%. So one of those things you can't really complain about, and just enjoy the ride for now. Okay, that's it for the day's recap. So number one, please head over to MasterChartsTrading.com. That's Master Trading, one word. Then click on sign up where I'm hovering, and select one of the um, services. We have alerts, which is basically a newsletter, and I send those alerts about various securities that we trade, such as individual shares, ETFs, foreign ETFs, speculative stocks. We also trade commodities, forex, cryptos, and gold. I put alerts right on the chart, and there is risk control as well. And I send out daily updates and weekly in-depth updates. If you already know what you're doing and don't really need my guidance, then simply get the indicators. So indicators are this green, blue, red, and yellow line. They are available currently for TradingView. We are working to convert them to other platforms. But for TradingView, right this instant, they cost $29.95 per month, and I think it's a steal because you can make a lot more money than $29.95 per month. The best deal, of course, is alerts and trading indicators combined, so you get the full package. And at $49.95 per month, I think it's a great value. You can also get a yearly subscription. The reason being is because not only you get the indicators, but you get a ton of examples. And you also get access to my trading blog and various lots of examples. I mean, every day I send out alerts, and I also am available to chat and to send and to speak, or rather to send communicate with the via the email. So do sign up here. All right, that's it for this week's recap. Again, if you have any questions, please send them in, share this video with others, hit the like button, and subscribe to this YouTube channel. Thanks for watching. Bye-bye.